there, good morning. You're watching Market Cafe with me, Snehi Shah, and this is ET Now. Now, this is a show where we take you through all the important updates coming in globally, all the important global stories that we're tracking for you, the global handover in terms of equity markets as well as commodities. And in the second half of the show, we'll delve into the domestic part and we'll look at what potential stocks could be buzzers in today's trading session, as well as what brokerages are keeping on their radar. So with that, let's kickstart this week's edition of Market Cafe. And while we had a public holiday yesterday, the stock markets were shut in India. We have a lot of action coming in globally. So let's kickstart the show with what's happening in the US and the global handover, starting with Wall Street. Now, stock futures were little changed on Monday night. Stocks kicked off October trading after lawmakers in Washington arrived at a short-term agreement over the weekend that headed off a government shutdown temporarily. Now, during Monday's trading, the Dow closed lower by 0.2%, while the S&P 500 managed to close in the green but was very, very flat nonetheless. Nasdaq, however, added almost 0.7%, rising for the fourth day in a row. Wall Street is also contending with rising bond yields because the Treasury yield that stopped at 4.7% mark at one point on Monday, which is again at its highest level since October 2007. Now, remember last week, this figure had cooled off from its 15-year highs, but it's back there and it has topped it once again. Investors are hoping to turn the page on the disappointing September for stocks. All three major indices closed the month and the third quarter lower. The S&P 500 itself lost nearly 5% in September, so let's see what this quarter does for Wall Street. Now, this means that economic reports such as last month's payroll reports due Friday and the kickoff of the earnings reporting, starting next week, they will be back in focus. On the economic data front, investors will be watching for job openings and labor turnover survey for August, which is due on Tuesday morning. Now, economists polled by the Dow Jones anticipate 8.8 million job openings. So let's see how this number comes in, if it is able to meet this estimate, if it's over that or under that, and that will impact Wall Street as well. So we will be keeping an eye out on this metric as well as everything else when it comes to the Wall Street. Let's shift focus to Europe then, and European stock markets closed lower on Monday as figures showed continued pressure on the manufacturing sector. The Stock 600 index closed with a downtick of 1% after a cautiously positive start to the session. Utilities shed 2.8% and chemicals also dropped 1.8%. Now, this comes in after the Stock 600 rounded off the worst quarter of the year and 2 successive months of declines. The latest set of Purchasing Managers Index survey on Monday revealed an outgoing downturn in manufacturing output as new orders fell by a near record level. FTSE 2 almost came in down 1.3%. Now, figures published last week showed Eurozone inflation fell to its lowest level since October 2021. It tumbled to 4.3% for the month of September, according to flash data. The European Central Bank hiked interest rates to a record level last month, but economists and investors expect them to have now reached their peak. So, largely this is what's happening on the equity front when it comes to Wall Street as well as European markets. Let's see how this pans out for our markets this morning. But let's shift focus from equities to commodities and let's talk about oil, because we're seeing some major action coming in when it comes to oil. Oil prices have fallen about 2% on Monday to a 3-week low as a higher price Brent contract expired. The US dollar strengthened and traders took profits, concerned about rising crude supplies and pressure on demand from high interest rates. On this first day at the front month, Brent futures for December delivery settled almost $1.5 lower at around 90.7 a barrel, or about 5% from where the November contract had expired on Friday. Now, that was the Brent's front month's biggest daily percentage decline since early May. You've got WTI at $88.1 per barrel, and Brent has, however, managed to hold on to that $90 per barrel mark. On Monday, the US dollar rose to a 10-month high against the basket of other currencies after the US government avoided a partial shutdown, and economic data fueled expectations that the US Fed Reserve will keep interest rates higher longer, slow economic growth. Higher interest rates along with a stronger dollar, which makes oil more expensive for holders of other currencies, could dent oil demand. Also, globally in China, the world's biggest oil importer, the World Bank maintained its forecast for 2023 economic growth at 5.1%, but trimmed its prediction for 2024, citing persistent weakness of the property sector. So, well, this is what's happening when it comes to oil. Let's focus to gold, because gold extended its decline for the 6th straight session on Monday to hit a near 7-month trough as as a robust dollar and prospects of higher US interest rates took the shine off the button. Now, spot gold was down 0.8% at 1,835.4 per ounce, which is its lowest since the 10th of March. Well, this is what the handover was largely looking like on the equity as well as commodity front. But let's also take a look at all the events that you need to be keeping on your radar for this week. On the 5th of October, you've got Bajaj Finance. The board will mull fundraising. On 5th of October, the Cricket World Cup will start. So, well, all eyes and all attention will be on that World Cup. And on the 6th of October, India's rate decision will also come out. So, keep an eye out on all of these cues.
Right, and let's quickly move on to macros. The US economy is still dealing with the aftermath of the pandemic, says the Fed Chair Jerome Powell during a meet with community and business leaders in Pennsylvania. While noting the pressures, he also cited labor shortages, ongoing difficulties with respect to childcare and other issues from the health crisis.
And staying with the US then, government has avoided a shutdown as the Congress passed a stopgap funding bill to fund the government for the next 45 days. The Democratic majority Senate voted 88-9 to pass the measure to avoid the federal government's fourth partial shutdown in a decade. While the move may have helped the Biden government for now, but if an agreement cannot be reached by the 17th of November, millions of federal workers once again face delayed paychecks, including many of the roughly 2 million military personnel and more than 2 million civilian workers across the nation.
Right, Sneha, that overhang not going away very quickly. But shifting gears to autos then, electric car maker Tesla reported its Q3 sales numbers, which is up 27% year over year and down sequentially on the back of factory downtime. The company sold 435,000 vehicles. Remember, during the second quarter earnings call, the executives had already warned of their production decline.
And the troubled Chinese developer Evergrande has applied to the Hong Kong Stock Exchange for trading in its shares from today. Remember, the halt was put last week after its billionaire founder was suspected of committing undisclosed crimes.
Right, and the World Bank has trimmed its growth forecast for developing East Asia and Pacific to 5% this year from 5.1% earlier, 10 bips decline there. Washington-based multilateral bank cited China and global demand amid a high interest rate scenario as factors that have dampened global trade. For the year 2024, the bank now expects 4.5% growth for the region, down from its forecast of 4.8% in April. According to the World Bank, while East Asian economies have mostly recovered from the series of shocks since 2020 and will continue to grow, but the pace of growth is likely to slow down.
Right, with that, let's shift focus to cricket then, because the World Cup is just around the corner and the game of cricket is laden with money. It is not just a lucrative world for income for cricketers and teams, but the game has made the Board of Control for Cricket in India, popularly known as the BCCI, the richest cricket body in the world and the second wealthiest sports organization globally. ET Now's Sumit Chaturvedi decodes how media rights, sponsorships and revenue shares fill the coffers of the BCCI and the governing body in India. Listen in. The game of cricket may be a means of entertainment for some or a passion for others. But take a look at the commercial side of the game, and it is a money minting machine for almost the entire system associated with it. The astronomical rise of the game in India and the money associated with it has transformed cricket from a pastime into a multi-billion-dollar industry. India, with the highest cricket-watching population, has made the game a commercial success and the Board of Control of Cricket in India a financial superpower. BCCI has its earnings from media rights, sponsorships and revenue shares from International Cricket Council, and its earnings and revenue potential has made India's cricket regulatory body a financial behemoth with a valuation of around $2 billion. BCCI, along with ICC, is hosting the ODI World Cup this year. The tournament will start on the 5th of October, where the first match will be played at the Narendra Modi Stadium in Ahmedabad. BCCI's commercial muscle is flexed with broadcasting rights and a plethora of sponsorships, including stalwarts like IDFC, Dream 11, Paytm, Hyundai, and many more. BCCI has reported a combined revenue of 27,411 crore rupees in the fiscal years FY18 to FY22, of which 7,606 crore was earned for the fiscal year 2021-22, while its revenue during 20 and 21 was 4,735 crore rupees. The revenue is expected to reach 80,000 crore rupees annually by 2027. BCCI has also paid a staggering income tax that includes 1,159 crore for the fiscal year 2021-2022, while in FY 2021, BCCI paid 844.9 crore in income tax, slightly lower than 882.2 crore paid in 2019-20. BCCI, with a staggering net worth of $2 billion, stands tallest among the group of other global cricket governing bodies. Cricket Australia has a net worth of $70 million, while England and Wales Cricket Board (ECB) has a net worth of $59 million. Pakistan Cricket Board has a reported net worth of $55 million, while Bangladesh Cricket Board has a net worth of $51 million. The Indian Premier League, with its international attraction and commercial strength, has already significantly boosted the BCCI's coffers. The inaugural season of Women's Premier League has added 370 crores to the BCCI's kitty.
Right. From sport, we'll slip into a very short break. More, of course, on the other side. We'll start looking at how Asian markets have opened up, what cues are suggesting from Asia, from the Asian basket, as well as then later on we'll start going stock specific. Well, thanks for staying with us. Let's quickly look at the at the Asian basket rather. Let's quickly look at the Nikkei first off. Seeing a bit of a decline there, some weakness in global markets also reflecting here on the Nikkei, down around 1.25%. You're also seeing a similar decline on the ASX 200, which is the Australian index as well, showing some amount of weakness. Let's also switch over to Kospi. Absolutely flat on the Kospi, at least currently up just about 0.1% or thereabouts. The Hang Seng also looking weak in early morning trade. They're looking at 2.5% decline on the Hang Seng. But China's factory activity expands for the first time in 6 months, and the Shanghai is absolutely flat on the back of that. So really not declining in an otherwise weak market that we are seeing within the Asian basket. Let's also look at the GIFT Nifty. Wish to point that out, down around 0.1%. So really not bad given the way in which bond yields have evolved over the weekend. We've seen a 10 basis point on the US 10-year, which ideally should drag the Indian market as well. But that's not fully reflecting on the GIFT Nifty, at least at the moment. But a slight negative bias coming in nonetheless. That is how I would define it at the moment. Welcome back. You're watching Market Cafe on ET Now. Let's quickly move on. Go a little bit more stock specific. Vedanta has announced the demerger of diversified business, bifurcating its business into 6 new companies. And with this demerger, it aims to cater to growing demand of commodities, energy, as well as technology across the world. Somit is here on the phone line with more details. Somit, talk to us about what this move means.
Well, Vedanta demerger is the biggest news that has come in post-market on Friday, and what the company is doing is they are demerging one of the entities into 6 different units. Now, the original listed Vedanta will continue to hold the stake in Hindustan Zinc. They will also hold the semiconductor business, the display business, and the Vedanta stainless business. Now, the other unit, the new unit that is Vedanta Aluminium, will hold the aluminium business, and it will also hold the 51% stake in Balco. Then there is Vedanta Oil and Gas, which will have the K in India business. Then there is Vedanta Base Metal, which will have the copper and the zinc international business. Then there is Vedanta Steel, which will hold the iron ore and the steel business. And lastly, Vedanta Power will hold the power units of the company. Now, the company has kept the demerger ratio quite simple. For every one share that a shareholder owns in Vedanta, they'll get one new share of each of these new entities going forward. Now, the company will require approvals from SEBI, exchanges, that is BSE and NSE, from NCLT also, and they're expecting all this procedure to complete by the first half of financial year 2025. Now, the positive thing coming out of from this demerger is value unlocking, because if you see currently Vedanta's businesses are saddled with huge holding company discount and are sometimes significantly undervalued. For example, if you see currently Vedanta's market capitalization, that stands at close to 82,700 crore rupees, while its stake in Vedanta in Hindustan Zinc in itself valued at close to 84,400 crore rupees. And post demerger, individual businesses could see a better value proposition going forward. However, the grey area remains when it comes to the net debt of the company. Now, how the debt will be divided among these companies are still not known. The company's total net debt stood at close to 59,000 crore rupees and seeking 75% approval from the secured creditors on this net debt. Net debt division could be one of the issues when it comes to this demerger. Now, earlier also we have seen Vedanta struggling getting approval from secured creditors when they were looking to transfer the reserves. So this is the grey area that continues to remain when it comes to Vedanta's demerger. How are the businesses valued? Now, the Vedanta entity, the standalone entity which will have the stake in Hindustan Zinc, is the most valued at close to 58,000 crore rupees. That is the enterprise value. The aluminum business is the second most valued at close to 44,000 crore rupees. Then comes the oil and gas business, which is valued at close to 22,000 crore, and the least valued business among the Vedanta group is the power business, which is valued at close to 4,600 crore rupees. Also, Hindustan Zinc came out with a similar announcement where they're looking to separate each of the entities into zinc and lead business. Then there's a silver business and the recycling business. Now, analysts have not given individual value to each of these businesses, but zinc and lead and silver are the most valued businesses for Hindustan Zinc currently.
Right, Swami, thanks a lot for taking us through that and breaking that demerger down for us. But while you're with us, let's also look at the recent changes in the oil and gas sector then, because what are the recent updates coming in from companies like Gujarat Gas, GAIL, MGL? So, Swami, take us through all of this.
Well, multiple updates that have come in over the weekend when it comes to the oil and gas sector. Firstly, for Gujarat Gas and GAIL, the Aramco propane prices for the month of November have been set at close to $600 per ton, as against $550 that was set for the month of October. Now, this means that the propane prices in the Morbi region of Gujarat would increase to around 44.5 rupees per SCM, as against Gujarat Gas's gas pricing of close to 43 rupees. Now, this is the pre-tax pricing that we're talking about. Now, high propane price is positive for Gujarat Gas, because that means that the consumption of gas in the Morbi region could rise going forward. Now, currently Gujarat Gas is doing a volume of close to 3.8 MMSCMD in the Morbi region, as against propane volumes of close to 4 MMSCMD. And also, this increase in propane prices would lead to higher LPG prices, which is beneficial for GAIL's LPG business. Now, when it comes to Reliance Industries and ONGC, it is the fact that the gas prices from the difficult fields have been cut by the government around 9.96 per MMBTU, as against 12.1 per dollar per MMBTU. Now, the new prices are marginally lower than what the street was expecting. Street was going ahead with a number of close to 10.4 to 10.5 dollar. Now, the new prices will be applicable from the 1st of October till 31st of March, and this is kind of negative for ONGC and Reliance Industries because they both contribute nearly 15% to India's overall gas production by 2025, and every $1 per MMBTU drop in the gas prices impacts Reliance Industries and ONGC's earning by around 2% and 1.6%. Now, City Gas Distribution would marginally benefit because they procure nearly 2 to 3% of their gas requirement from difficult fields, and lower gas prices could lead to higher margins for them. Also, this lower gas prices is positive for fertilizer, petrochemical, power and sponge iron players, because gas is used as a feedstock in all of these industries. Now, apart from this, Mahanagar Gas also stands to benefit because they have cut recently the CNG prices by 3 rupees per kg and the domestic PNG prices by 2 rupees per kg. Now, they have passed on the benefit of this cut in gas prices to consumers, but it appears that the price cut is more than the benefit of the lower gas cost. Now, according to analysts, the company might be taking a hit of around 1 rupees per SCM on their margins, but do remember the margins continue to remain high. In the first quarter of FY24, the company had an EBITDA margin of 16.8 per SCM, which is the highest and more than double of the industry standard. Even after this cut, the company's margins are expected to remain in the range of around $14 to $15 per SCM, which would be the highest in the industry. So, higher margins plus this cut would also lead to more volumes for Mahanagar Gas going forward. So, all these companies do keep an eye on trade.
Thanks for that, Somit. We will keep our eye out on that one. Let's quickly move on. Gross GST collections for the month of September rose 10% to over 1.63 lakh crore. It's the fourth time that GST collections have crossed that 1.6 lakh crore mark in the current financial year. Well, my colleague Prakash joins us with more details on that one. Prakash.
The Finance Ministry has come out with GST collection numbers for the month of September, which shows around 10% growth on year basis, which is a positive development for the Indian economy. As per the data, Finance Ministry has released GST collection has once again crossed rupees 1.62 lakh crore, which is a very positive development on back of multiple compliance-related reforms that the GST Council has taken. GST collection numbers have crossed rupees 1.60 lakh crore mark for the fourth time in the current financial year. When it comes to GST collection numbers, overall GST collection numbers in the first half of the current financial year, it crossed rupees 9,92,508 crore with a growth of 11% on year basis. When it comes to average GST collection number in the first half of the current financial year, which is around rupees 1.65 lakh crore with a growth of 11% as compared to rupees 1.49 lakh crore in the financial year 2023. So it's a positive development coming in when it comes to central and state governments, and the GST collection numbers are increasing steadily, and on back of multiple compliance related reforms in GST, we are only expecting the GST collection numbers may improve further.
All right, thanks Prakash for all of those details on September's GST collection. Now let's switch gears to the auto space then, and let's focus in on the biggest cue that the market will be eyeing, which is the auto sales for the month of September. Shrishti is joining us on the phone line with more details. Shrishti, what does the fine print look like?
Well, yes, this time the festive cheer was seen across the segments, wherein majority of the companies have reported numbers better than the expected, be it the like from M&M, Eicher Motors, Hero MotoCorp, TVS Motors, and even Tata Motors Commercial Vehicle. Let's start from the passenger vehicle segment. Herein the outperformer was clearly M&M Automotive Division, which saw a jump of 7% on a month-on-month basis, while for Tata Motors as Maruti Suzuki, there was a decline of single digit. Coming to the commercial vehicle segment, we have seen a surprise coming in from Eicher Motors as well as Tata Motors. Both the companies have reported a jump on a sequential as well as on a YOY basis, and Tata Motors have come off with quite a positive commentary, saying that they have ramped up the production of their electric vehicle division. In the two-wheeler segment, we have seen companies like Hero MotoCorp as well as TVS Motors reporting way above the estimates, wherein Hero MotoCorp registered a sales growth of 10% sequentially and TVS Motors saw a jump of 16%, while for Eicher Motors Royal Enfield, a bit of a disappointment coming in with almost a flattish growth on a month-on-month basis. And lastly, from the tractor division, M&M Tractors reported, like we expected, a jump of 99%, a little better than what we were expecting. So all in all, across the board, we have seen good sales data coming in for the month of September.
Good sales data for September, but very quickly moving on. IndusInd Bank is going to unveil its digital bank Indi tomorrow. ET now has learned from sources that apart from banking, the new platform will also provide equity trading and has partnered with Paytm for this. Ankur Mishra has more details on this one.
Yes, sources say that IndusInd Bank is planning a digital launch this week, and this launch may happen on Wednesday itself. There is a digital bank which the lender is calling, and it is named Indi. Now this Indi will provide all kind of banking services, including opening of account as well as FD services and credit facilities, but this is not limited to just banking services. The lender is also providing equity stock broking services in partnership with Paytm Money. Now this will be available on its new digital bank, which is named as per the work which the lender plans to ascertain from this new launch. Now, as far as the plan is concerned, it is part of Digital 2.0 strategy of the lender and PC6, as the lender had informed earlier. In fact, ET Now had earlier reported that the lender wants to enter into mutual fund as well as insurance business as well. Now the lender aims to increase its presence in the individual segment, and hence this new digital launch is planned. Remember, the lender had posted a net profit of over rupees 2,100 crore in the June quarter, and with this digital initiative, the bank wants to expand its business in the individual segment.
Well, that's an ET Now exclusive coming for you. IndusInd Bank to launch its digital platform tomorrow. Thanks, Ankur, for breaking that down for us. But let's get a move on then. And PM Modi's $2 billion tech push takes shape as global tech giants Google and HP assemble to manufacture Chromebooks from India. Now, this move will help Google in boosting its supply in India and thereby compete more effectively with the likes of Dell and other players in that segment. The move is also being looked at as a win for Prime Minister Modi's $2 billion push to get more and more tech giants to set up manufacturing bases in India. Local manufacturing will not only help companies to maintain stable supply chains but also avert import curbs.
Right, that time of the show where we slip into another short break. Of course, stay with us because we'll continue talking specific stocks, what you should keep on your radar for today. Welcome back. You're watching Market Cafe on ET Now. Again, that time of the show where we start looking at levels for today, and we have Ansh to break that down for us. A quick snapshot of the F&O.
Sure. So as you can see on the chart as well, Nifty on Friday tried coming back above 19,650 level, but it failed to hold above it. However, it managed to close above 50 DMA. Also, mid-cap and small-cap indices closed above the 20 DMA support, so we can have some positive hopes over here. Now, let's see what happened in F&O segment. Short covering was seen in Nifty futures with open interest increasing by 3%. This indicates bears are taking some rest here. Whereas on option front, we saw some put writing at 19,600, indicating some support here. Whereas on call side, we saw strong call writing at 19,800 level, indicating strong resistance we may face if Nifty goes up. Now let's see what FIS did. In index futures, they covered 3,700 long and they added 4,300 short. So net to net, we are seeing 8,000 contracts on downside. This resulted in FIS short holding inching higher from 69% to 72%. On option front, we are seeing call shorts of 1.6 lakh contracts and put shorts of 1.8 lakh contracts. This indicates that option traders are expecting a sidebound range over here. So in a nutshell, we can say that Nifty looks sideways around 19,650 level with some positives in other broader indices. Also, Nifty needs to give a decisive close above 19,650 to be clearly positive.
Thanks, Ansh, for taking us through that. Now, before we move on to all the important stocks that could be potential buzzers in today's trading session, let's quickly get an update from the Asian markets because we've got some harrowing moves coming in from Hong Kong. Now, Hong Kong stocks have fallen about 3%. There you have it, 2.9% downtick, leading wider losses in the region as investors are awaiting a rate decision by the Reserve Bank of Australia. Now, RBA is expected to maintain a hawkish stance at the upcoming meeting, according to ANZ. The Reserve Bank of Australia is expected to keep rates unchanged in the upcoming policy decision meeting. It will be the central bank's first meeting under the new governor, Michelle Bullock. And according to a Reuters poll, the central bank is expected to hold rates at that 4.1% mark. Now, remember, Australia's inflation in August had ticked up to 5.2% on a year-on-year basis. This is according to official statistics. So while you can see negative sentiment is panning out, and Australia ASX 200 also down 1.2%, and Hang Seng is the one that is seeing very sharp cuts, down almost 3% as we speak. But with that, let's also shift focus back to domestic cues, and Ansh, take us through all the important stocks that could be potential buzzers in today's trading session.
Sure. So Eris Life Science will be the first stock in focus for today's trading session. As company has secured a 212 crore term loan facility from HDFC Bank, no expected change in consolidated net debt. Apart from this, TVS supply chain will also be in focus as company subsidiary Rico Logistics has sold its entire stake in Circle Express for 2.1 million euros. RVNL emerges as the lowest bidder for development of distribution infrastructure in Himachal Pradesh, valued at 1,097 crore. Kalpataru project has got orders worth 1,016 crores, including T&D and BNF business segments. Indian Oil will also be in focus as company has received a departmental appeal order from GST with expected financial implication of around 4,000 crore. Aurobindo Pharma will also be in focus as USFDA had conducted an inspection at company's manufacturing facility conducted at Telangana site. post which they have issued 483 form with one observation. Lastly, Astra Microwave will be in focus as company has got an order worth 96 crore from Indian Air Force. So keep an eye on the stocks.
Right, thanks for that, Ansh. And multiple stocks, including Dabur, Tata Consumer, Pidilite, all of which will be in focus after they held their management meets, and JP Morgan shared their key takeaways. The overall sentiment looks upbeat, even as some concerns related to international markets remain. Vinny joins in with the details on that one. Vinny.
So absolutely, JP Morgan has met with all these managements, and let's start with Dabur first. And Dabur has, in terms of the management meet highlight that has come in with JP Morgan, they're highlighting that the domestic volume growth is expected to gradually start recovering. Margins are expected to be at around 19.5% in FY24 and gradually start moving up to 20% as well. Q2, yes, witnessed some bit of a volatility due to uneven monsoon rains. Premiumization is what the company will be focusing on, and that is going to be rising across most of their products segment as well. Healthcare division too is to witness new forays into baby care, therapeutics, as well as branded ethical leveraging on doctor advocacy channel will be something that will be scaled up by the company as well. An inorganic route to be explored for selective forays in white spaces where they see which is available in preferably that's mostly going to be in the domestic market. That's a key highlight that has come in from Dabur. Tata Consumers, what is the key highlight? That one, domestic tea and salt, both these portfolios are witnessing a gradual improvement in volumes, with price now being largely stable. Sampan's portfolio also is quite healthy in terms of the revenue growth momentum. 30% is expected to something that they are expecting to sustain going forward as well. Nourishco is scaling up well, and that is going to be aiding the mainly aided by the distribution expansion as well as innovation of the companies. International business volumes are going to remain weak, mainly because of the operational rationalization, and that is expected to drive the margin recovery. That's the word coming in on Tata Consumers. Tata Coffee, the integration could be expected in the next few months, while the opportunity to improve profitability and cash flow will also be there. And Starbucks also has a high growth ambition of 70 to 100 stores additions per annum. So keeping an eye out on Tata Consumers as well. Let's move on to Pidilite. Positive demand trends is what Pidilite is highlighting in terms of a narrative that has added mainly an improvement coming in from small town consumption, real estate cycle, upcycle that we're seeing, and government's focus on infrastructure spends. That will be something that will be aiding Pidilite as well. And they're seeing a recovery in terms of demand. Demand for export and B2B players is depending on export remains quite weak in terms of that, slightly weak over there. International business largely focusing is largely going to be focusing on emerging markets. Gross margins have recovered in Q1. EBITDA margins are maintained at 20 to 24% is what they're expecting, and paint play will be focused on smaller towns. That's the word coming in from Pidilite as well.
Absolutely, Winnie. Thanks so much for taking us through that gist of what JP Morgan's pointing out. The FMCG sector will be in focus on the back of that. But let's get a move on then. And the key listing that the street has been awaiting, JSW Infra, will be debuting on the bourses today. Now, this is the IPO from the JSW Group in the last 13 years. My colleague Sharad is joining in with more details about this new listing. Sharad, take it away.
In focus, we are having JSW Infra, and this is the first IPO coming from the JSW Group. And the thing is, the IPO price is at roughly 119 rupees per share. Now, if you look at the subscription numbers, that is coming at almost 37 times, and the total IPO raised money was almost 2,800 crore rupees. Now, of course, what we are seeing from the grey market is expected that the premium listing is expected to happen by more than 20% odd. Also, importantly, the company would be focusing going ahead in their expansion and getting more orders coming in from public ports as well. And currently, their revenue breakup between anchor as well as third-party customers include between 65 to 35% odd. And if you look at the valuations also, EV/EBITDA front, especially on the FY24 basis, it's coming at roughly 13 to 14 times as compared to Adani Ports 20 times. So you're expecting a strong listing on the bourses today.
Right, thanks for that, Sharad. Let's look at some Q2 updates trickling in. Coal India, Hindustan Zinc, Ultratech Cement in focus today. Sharad, talk to us about updates on those.
Well, yes, over here, if you look at the updates coming in for Coal India for the September quarter itself, you look at the total production that has actually gone up on a year-on-year basis. There has been a growth of almost 12.6%. And if you look at the total offtake also, that has also gone up by almost 12.6% on a year-on-year basis. And do remember, there has been an increase in the power demand as well. Because of that, the Coal India's production numbers have also gone up. Now, looking at the Hindustan Zinc numbers, sequentially, there has been a drop for the mined metal production, if you talk about it, and even the refined metal production, both have actually come down almost 2 to 7% on a sequential basis, and on a year-on-year basis also there has been a downtick coming at even the integrated zinc production numbers. If you look at it, that's down 12% on a sequential basis. Also, in Ultratech cement, if you look at it on a year-on-year basis, the cement the production has been very strong. The sales, if you look at it, that's up 15% on a year-on-year basis. Generally, the company deals with grey cement, and that's up almost 15% year-on-year basis. But if you look at the sequential basis, the numbers have seen a downtick of almost 12% on a sequential basis. So if you look at it overall, coal demand has actually picked up, while the other sequential numbers, if you look at it, those numbers have actually come down, be it the zinc, be it the cement pack.
All right, Sharad, thanks for taking us through that. And select stocks have turned up on Citi's radar, the likes of AU Small Finance and IT bellwethers, the names of TCS, Infosys and HCL Tech as well. So what's the outlook on these stocks and what's the rationale behind all of these? Let's go across to my colleague Vamakshi, who's joining in with all the details. Vamakshi, good morning. Take it away.
Well, yes, let me first start off with a few BFSI stocks that are on Citi's Catalyst watch. Let me first start off with AU Small Finance Bank. They have put this Small Finance Bank on the negative Catalyst watch. They are expecting some softness to continue in the second quarter as well. Some of the sell downs could actually impact the on-balance sheet growth, and in fact, the company has high share of fixed rate portfolio as well as is shifting towards low yielding assets, which actually impedes the company's yield improvement potential. They also have very little contingency provision left, and any incremental stress is expected to show up in the credit cost, which is why AU Small Finance Bank has been put on the negative Catalyst watch. On the other hand, we have Citi placing a positive Catalyst watch on Shriram Finance, owing to, in fact, they're expecting the outperformance in order to continue on the back of stronger earnings as well as inexpensive valuations. They're expecting the company to deliver 18% plus year-on-year growth in the AUM, mainly driven by the PV, MSME as well as the gold segment. They also believe that the company will soon start unlocking its merger synergies, as erstwhile Shriram Transport's nearly 500 branches get equipped with disbursing gold loans. Apart from that, the asset quality is also expected to be stable, which is why Shriram Finance is on Citi's positive Catalyst watch. Now moving on to the IT sector, they have a positive Catalyst watch on Infosys, while they have a negative one on TCS. They believe that there are higher risks to TCS consensus estimates, but Infosys is relatively de-risked post its Q1 cut. Infosys also has a very strong TCV, and this in fact raises hope for a faster growth for the company in FY25. Moreover, Infosys trades at a nearly 15% discount to TCS. Moving on to HCL Tech as well as Tech Mahindra. Now, what Citi believes is that HCL Tech has much better growth visibility. Tech Mahindra, however, the hopes of a turnaround are already priced in. And in fact, when we talk about the valuations, HCL Tech trades at par with Tech Mahindra, but HCL Tech has much better execution. So given that HCL Tech, they have a positive Catalyst view, and for Tech Mahindra, they have a negative Catalyst watch. And lastly, let's also focus in on LTI Mindtree, wherein Citi has a negative Catalyst watch. They see some risk to earnings given the weak discretionary spending outlook as well as high multiples, and in fact the Q2 FY24 numbers could actually drive the EPS downgrades in their opinion. So all in all, on the back of this, keep an eye out on all of these counters.
Right, thanks so much for that, Vamakshi. But with that, we're completely out of time on this edition of Market Cafe. From Snehi, myself, everyone who puts the show together, thanks so much for watching The Market to take the action forward.